Hello, my name's Raitis, and welcome back to another evening commentary, ladies and gentlemen. Today we will be going over our trade that we took on NQ, which was spoiler, it was a partial loss. Even if we had our draw on liquidity right, but the market didn't offer significant displacement in the first place. That's why we aborted the trade. And yeah, we will go through this trade. I will talk you through the thought process, and I will also include a new trading protocol for a low probability environment. So stay tuned, and let me pull up the Discord. I posted this trade on my Discord channel, so feel free to join in the link in the description below this video. I share my trade ideas with you there for free. I posted a low risk buy, market should not close below the 50% off the propulsion block, and then I just cleared that. With low risk I don't mean high probability but decreased leverage, because we have a reversal trade on the play and we're playing consolidations expectations. You can see this was the trade based on a 5-minute time frame. This was the propulsion block, market shouldn't close below the 50%, and drawn liquidity was the intraday high. So let's talk you through the trade. And again, I talked about this in the weekly commentary that we rallied from this daily order block, daily fair value gap right here. And the key point is that we are still inside a consolidation, in my opinion. I am not fully convinced that this is a bearish trend for now. And just also, by the way, how the market is looking to close for the day, I still believe we're going to wick back into the range and continue the consolidation and at least retrace to equilibrium or reclaim this fair value gap. This is my expectation going into tomorrow. But if we go into the lower time frames, you can see this is where we had the opening bell. Before that, we had a consolidation going into London session, and then during London lunch, market sold off a little bit, and then New York Open offered a retracement. Sorry, not New York Open, but New York Stock Exchange Open offered a retracement into the fair value gap, and this was actually a nice short. But the key point is here, I didn't want to short as we were already at a weekly low. So this is a near-term objective on a daily time frame. You can see it's outside the 20 data IPTA range, even 60. So it's 82 bars, basically 82 real trading days away. That's why it's even a long-term target. And the protocol for this is, if we reach a long-term target, we expect distribution or consolidation. And I was just playing off this idea, couple that where we have a consolidation. We traded below the initial dealing range low, and I wanted to see a retracement back into the range. Now I aborted trading New York session. I waited for London close. This was the expectation. Now you must know that this news event wasn't even here as we started the trading day, and as we were inside New York's session. This just popped up I think a few hours ago as I was in the gym. We didn't see this news release, so this is a tentative event that President Trump is speaking at 9 p.m. Eastern Standard Time. This wasn't there. That's why, yeah, basically there was nothing for Tuesday. Means no economic news release, coupled with the fact that we have on Friday we have the NFP news release, which makes this week really tough, and not low probability, but it's tougher condition to trade in. and we had no news release. But I still wanted to see if the market can deliver my expectations. And as we traded into another weekly low into the sell side liquidity, you can see I waited for London close. With London close, we traded into this weekly discount array market, saw some initial rally, and I thought, okay, we saw change state of delivery, we closed above this fair value gap, invalidated this order block, and I thought, okay, now let's trade this propulsion block because we have an order block right here, this massive down close candle, and we have this 5-minute order block. This is the high, and we have the 50% somewhere right here. And I told you I didn't want to see the market close below 50%. So you can see this was our entry, stops below the rejection block. And yes, the market would have delivered our target and would have been a 1-to-4 risk reward ratio and so on and so on. But we closed our trade exactly right here. So our stop was around 400 ticks. You can see right here around 400 ticks. And we close our trade at, let's say, around 100 ticks. So we took a quarter R multiple loss, which is basically nothing. It was just a small partial loss because the market, I thought if it wanted to rally, then it should do straight away. I didn't want to sit through all this. I think I can't say this word on YouTube, but just massive consolidation and ugly price action. And it would have came close to my stop loss. It wouldn't have hit the stop loss because our stops were below the rejection block. And then market rallied off away at the end of the non-closed kill zone. You can see 12 a.m. market had already displaced higher. Again, these are the conditions you will get on days where you don't have a high impact news release or medium impact news release when we have an NFP week. Conditions will be tough. Now, what I wanted to do is I wanted to look at T-bonds coupled with the fact here what we saw on NQ. So you can see there are periods of time where they trade in sync and when we have decoupled markets. But overall, if we have a bearish dollar, of course, T-bonds should be bullish. If interest rates are bearish, then we should see higher prices on the equities. So T-note futures should be trading in sync with the equities market. Now we're seeing a decoupling. Equities are trading lower. T-bonds are rallying massively. But you can see market started to displace as we were consolidating. I mean, right now we don't really want to look at T-bonds because we're inside a massive consolidation and we will get disparity between asset classes. That's what I wanted to talk about. Don't use T-note futures as a confirmation if we are inside a consolidation, because in these cases you will get disparity between asset classes. Now we chose the right leadership pair. NQ was the leadership for today. On YM we would have been stopped out. On ES we would have been stopped out if our stop loss was below the rejection block. That's why our asset selection was great, but nevertheless we ended the day with a partial loss. That's okay, we're going to come back tomorrow. Now we have seen the displacement from a key higher time frame level. I like the displacement. Now I think all of this are short trapped retail traders. Retail trapped short for the week. That's why I don't want to see the market revisit this area right here. If we are bullish, I don't want to see the market trace back here into this range, because I think we have retail, which shorted the whole breakout and now are trapped short. Of course, open float liquidity, first stops would be resting above this high, which we had outlined as a 1 hour drawn liquidity. For drawn liquidity is the 4-hour rejection block right here. Now, of course, also all of this, we have retail trapped below this low. That's why ideally I don't want to even see market return into the 4-hour order block, into the lower candle. Because I think we had no interest, we had no economic news driver, and market suddenly drops lower without any economic news release and then rallies higher. So this, in my opinion, is valuation by speculation in this case, ladies and gentlemen. And that's why I will be going in tomorrow and looking for more longs. If our expectations get confirmed and we don't trade back into this range, then I will be looking for longs into low resistance liquidity runs this high. I mean, we took out stops right here, but we have relative equal highs right here. So this is, for me, this is a low resistance liquidity run right here. And I will be targeting, this is my target objective if we see higher prices. But we missed out on the move today. It's okay, we took a partial loss. I really don't care, I just trade my trading plan, trade my protocols. And yeah, with that said, let's just quickly go over the other assets. We were 12 minutes into the video. Hopefully we can keep it at 15 minutes or so. DXY just sold up massively, beautiful. We anticipated this being a manipulation at the end of the month. Distribution, run up into a bearish order block, sells off very, very nicely. And we have hit our near-term objective, which we outlined in the weekly outlook. T-note futures rallied up into the buy side liquidity. We hit our target as well, traded into the bearish order block, and now we're seeing a rejection. The question is, was this all a run also on a larger scale evaluation by speculation? And the question is if we're going to run back lower after the stop run. This is the key question. I mean, this daily candle is not looking good for continuation trades. I would be very, very cautious. But if T-note futures are going to sell off, this will make it very hard for DXY to run lower. But I think this low is doable for this week's price action, just by the way of how we closed, or how we will close Tuesday's candle. I think this is already enough to say that we will probably take out this low and maybe revisit this inefficiency and this whole consolidation. So euro up into, straining up into the rejection block. Let's look at the CFDs. Up in at the monthly fair value gap high, which was our target outlined on the weekly outlook. Go check it out if you didn't do so. Just wonderful displacement. Monday creates the continuation of the swing low. Wonderful, wonderful, wonderful. Again, stop run during London close and then continuation higher. Again, very, very weird day. You can see GBPUSD did basically nothing until we saw the expansion during London close. Euro as well. We didn't see really anything except when the market came closer to the London close hours, and then we saw the rally. So it can be very tricky, and the protocol I want to give you on your hand is if we have during NFP week. trade when we have a when we have no medium or high impact news release. And that's basically the protocol, because you will get conditions like these, or expect the market to rally during, or expect the market to rally outside your usual kill zones. That's basically the protocol. I just recommend you to don't trade when we have no high or medium impact news release. I added this, or I need to add this to my protocol. I think I didn't add this. Add this in mind because I wanted to talk about this with you on the video. And yeah, so this is my protocol. I will add. You can see, I mean, yes, now we have the President Trump speaking later on, but this would even add to the fact, because now we have a high impact news release post 10 a.m. And we talked about this filter for a long time on this channel for the last couple of weeks. If we have a news release, high impact news release post 10 a.m. and we have no high or medium impact news release during the given session we wanted to trade, during New York session or a London close session, then we do not trade, because this is low probability and we have NFP on Friday. So this is just a confluence of multiple low probability filters. And with that said, guys, I will leave you with that. I hope you found this insightful. Don't trade on days where we have no high or medium impact news release during NFP weeks, and then you will be on the safe side. Take a day off, enjoy time with your family, friends, and yeah, refine your craft, backtest your strategy, or do something else, journal, and go outside. And we will see us tomorrow, and I will update you on the Discord channel. Until then, stay safe, trade safe. Bye bye.